Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on euro currency. As you can see on the technical side, not many things actually to talk about, just because just take a look at Friday session. So everything remains the same. So if you would like to hear only about technical, you could not watch this video, because I will not tell anything new compared to what I said yesterday. So speaking about some fundamental things, we have prepared the report as usual today, and mostly dedicated to analysis of the sentiment in the market. So actually, as you understand, currently it's two big blocks of the analysts, who first camp thinks positively, is watching for retail sales, watching for CPI, watching for job market. They are really sure that will be one rate hike from the Fed in July, and that's all. Others, let's call it as a pessimist camp, suggest that it's not over yet, and they have a lot of doubts concerning data, statistics. It's expected some deteriorating should be, and it's not over yet with inflation and so on. So to be honest, guys, we belongs to the second camp. Just well, I was a bit surprised, but I saw in a really big media such as Reuters the article where people in analysis from the big banks talk about the same. So that's, they mention the basis of the comparison as for inflation, as for other statistics, and particular inflation. Many analysts right now talk the same things that we have said a couple of weeks ago, and said that this is just due to the comparison of the high base, just because inflation was at the top level a year ago. And if you compare the pace of the inflation right now to the pace that was a year ago, when it was at maximum, it logically, just as a result of the maths calculation, it shows lower pace. But the effect of this high base is gradually exhausting as we are coming to the next months, and particularly in August and September, it might be surprises in the CPI numbers. Especially it is thrilling as we're going to the September meeting, and if we will get surprises in September of the CPI, it might make impact on the Fed decision. This first moment. Second moment, we have tried to take a look at some data that if you take a look at the surface, it seems positive, such as retail sales, for example, or the job market. And if you dig a bit deeper, you'll see that everything actually not as positive. And we have put this in our research as well, so you just could better understand why we're not so happy and so sure that actually definitely we're on a way to the rally and on the way of the improvement in the economy, soft landing and so on. We think that it's not how to say, that's actually, well, it's not, and everything is not decided yet. So we do not have yet the rock hard confirmation that we're on the way of the growth. That the worst stands behind. We're not out of the woods yet. That's our view. If we will be wrong in September and August, the situation still will improve. Well, in this case, probably we will have to review our analysis, but something tells me that hardly this will happen. So now let's take a look at the technical side. So mostly we have discussed everything on Friday. Here we treat this area as very nice to consider long position. It's just because, take a look, we have oversold and strong support cluster of different levels. So somewhere around 1050 area, maybe slightly higher, 1060, we intend to consider possible taking the long position with initial stops below this level. It will be relatively safe with the low risk. It's just because this is oversold, and if you place stop below the confidence, well, I don't know what should happen to trigger your stops right below this area. So this will be very good protected position. And taking in consideration the overall pace, yes, maybe it is not totally fits to idea of the bread and butter trade by the Jet Napoli, but still momentum is rather strong, and it's increased chance of the bounce. Although I'm not excluding the chance that it might be another upward direction back to the top. So it also could happen. So that's why next week we probably will dedicate to possible taking the long position, considering signs around the support and see what will happen. But first, as we said, on the 4-time frame chart, market has to complete the double ripple pattern. So based on the performance on Friday, yes, market was not able to break confidence support that we talked about. If you remember, that was the reason why we called to take some profit around it if you still hold the short positions. Now, if you haven't closed it, you probably keep it for the weekend. But by taking a look at the overall performance around it, we do not see something really explosive reversal, sharp reversal, bounces. So it means that, well, everything still stands bearish, and market, well, has good chances to break it down. So in this case, we will be watching for reaching of this major target. It's 1063 the XOP, and it's accompanied with the fib level 1055. That will be agreement support. And what's more important is that it agrees with the daily oversold. So this will be a great opportunity to consider taking a long position around it. So that's what we intend to keep an eye on. Let's see how it will turn.